Andrew, welcome to FACE. I'm looking forward to having a discussion with you. Glad that we connected on Twitter. How are you today, buddy?
Oh my gosh, how are you doing, Dale? I'm doing
Pretty
awesome
good.
today. I actually
Uh,
just finished up a run a couple of minutes ago. And thank you so much for
okay.
having me on your show, man. I really appreciate it.
It's great to meet new people. I believe we learn from everybody, and checked out a little bit of your background that you used to be with Vanguard, and you did a lot of their bond work and derivative work, emerging market stuff, and graduate of LaSalle. Where is LaSalle? Is it in the Midwest?
LaSalle, it's in Philadelphia, Pennsylvania. Yeah, and
Okay.
I played Division I tennis there as well.
Okay. All right. Well, great to have you here. I know a little bit about your journey, but so out of school, you went to Vanguard. Was that your first intro to the industry?
Exactly. Yeah. So let me give you full background. Yeah. So for me, pretty much ever since I was born, I always loved playing games. And I've always had like pretty much like an obsessive personality where it was like when we were playing games as a kid, I was always that kid, like one more game, one more, one more. And when
Right.
I found something that I liked, I would really dive in head first and go into
Yeah.
it with a laser beam focus. So my first passion in life was actually basketball. And I was like super into basketball, wanted to be just like Mike, all that good stuff. Ended up
Yeah.
playing that till about like, junior year of high school. Had some difficulties. I was pretty fly for a white guy, but had some issues, moving up to the higher ranks. Then I got into tennis. It was just like a gym teacher. I was like, hey, we need some extra guys for the tennis team, come out for the team, whatever. And I did that and I just fell in love with the sport. And again, I got super obsessed with it. And I was like, I'm going to be a pro tour tennis player. I'm going to
Right.
be the next Federer, all that good stuff. And I ended up getting a scholarship to play in college, which was awesome. And that was like the primary reason why I went to LaSalle. I
Yeah.
studied econ and finance at LaSalle. And
Free ride.
I remember in school, it was just like, oh my gosh, I hate school. But economics just made so much sense to me and I really enjoyed it. But yeah,
Okay.
so I did that for a couple years. Then I realized, oh my gosh, pro tour tennis isn't going to be a thing. What do I do now? These European guys are smashing me. And so about that time, that's where I really got into investing. It was in my junior year of college. And I took a financial markets and institutions class. And I was like, oh my gosh, this is another game that I can play. And really what I loved about it was like, I could see the writing on the wall with corporate life, how it's like a lot of politicking and nothing's really a meritocracy. And you kind of just have to like wait your turn for a lot of things. And so I was like, hey, portfolio management, like if you're good, you can earn more money. If you're not as good, you earn less money. So I was just super
Competitive.
attracted to it.
Yeah.
Mm-hmm.
And the big one of the best jigsaw puzzles on the planet is putting all the
Exactly.
pieces together. So, um, were you going to share any looks or views that you have on the market with us? Do you need the screen share, or should I
Yeah,
show
that would be
something?
great. Yeah, I'm going to go ahead and share my screen. I'll share with you my thoughts on the market. But anyway,
Okay.
long story short, went to Vanguard and I was working in their retail investor group for my first year there.
Yeah.
And I was like, man, I really want to get onto the portfolio management side. That's my
Oh,
passion.
so
That's my goal.
is that code word for you were making cold calls?
So not cold calls, which is good. So at Vanguard,
Yeah.
Vanguard's so big, the clients call Vanguard, but I was
Wow. Nice.
receiving the calls. Yeah.
Nice.
Yeah. So I
Okay.
did that. And I was just helping retail investors plan for retirement, that sort of stuff. So it was a pretty cool
Right.
experience. And then I worked my way onto the fixed income trading desk. And like you mentioned earlier, I got a taste for pretty much everything. And I was like, let's just, any work you guys want to give me, I'll do it. I want to learn everything. So I got to rotate through like the emerging markets desk, index desk, money markets desk, learn the full trade life cycle on an institutional trading desk, and learn some derivatives as well. I ended up getting into an advanced development program. It's like the IMDP, Investment Management Development Program. Ended up getting kicked out of the program because I had so many compliance violations. And from there, I was like, you know what? I'm making more money trading than I am in my day job. So that's where I jumped off and I started trading full time.
Okay. Right. Great story. What were the compliance problems? Like internal things that you were supposed to do that you didn't
Yeah,
do?
exactly. So like basically Vanguard, world's largest mutual fund shop, multi-trillion dollars in AUM, they're trading pretty much every single security in the market.
Yeah.
So we had all of these internal rules where basically they tried to incentivize you to only invest for the long term in their mutual funds. So if you wanted to trade any individual stock, you needed to get approval, compliance, like all that
I
good
see.
stuff.
Yeah.
And I was super into trading and I just wanted to like test my skills and like really just do stuff in my brokerage account. And it ended up just continually causing me issues and whatever. So it was
You
kind of just
needed
like
the
the writing on
freedom.
the
I mean,
wall.
it's tough enough to perform in the markets without having hurdles, corporate hurdles to overcome. So,
Yeah.
yeah. So, okay. And then how did you come to, you know, relying or learning about technical analysis? Because you didn't learn that at LaSalle.
I did not. So very cool stuff. When I first started, I'm a CFA charter holder and that's all
Okay.
fundamental work.
Yeah.
And when I first started my journey, I was like, technical analysis, this is garbage. This doesn't work. This is chart voodoo, whatever. And I didn't incorporate it into my process at all. Then as I got further down the road, I met the portfolio manager on our emerging markets desk at Vanguard. And that's like, that's the best team that they have at that company. And he was like, what are you talking about, man? Like we use technical analysis all the time. And he was a huge proponent of it. And as I got further along my journey, now technical analysis is like the primary component of my strategy and what I do now. So it's definitely been a learning experience.
Any influences, books, mentors that helped you along the way?
Oh my gosh, I have so many. So I have like my Mount Rushmore of investors, obviously Jack Bogle, founder of
Oh,
Vanguard.
okay.
And then as well, my strategies now, they're primarily influenced by Mark Minervini and his work
Okay.
and David Ryan and his work. Those guys are
Oh, yeah.
multiple US investing championship winners. And
Relative strength.
yes, yes.
Okay. So determining leadership and laggardship for your longs and shorts, right?
Exactly. So that's the primary components of my strategy. But
And
I would
for
say like,
charting though, charting. So is it Mark who's charting, or did you read books? I know you used candlesticks. Um, uh, who would you say was your charting technical mentor
I
for
would
the
say,
setups that you have? Or would, yeah, and it's okay to be self-taught too. Would you say you're more self-taught technically?
yeah, I've
Yes.
been just a big time tinkerer. So I tinker with
Okay.
everything and I
Hmm.
just try to consume as much as I can. I've had so many teachers that honestly, like in the age of the internet, man, this is fantastic. Like you can have mentors that you never even met that person. They're a huge mentor to you. So I picked something up from everyone. And primarily in my technical trading, I use market profile levels. So I'm looking for high
Okay.
volume nodes where a lot of
Yeah.
transactions have occurred.
Okay. All right. Familiar with market profile. A lot of success people have using that. So tell us what your view is on the S&Ps, and were you able to recognize this when everyone was scared to commit to taking some risk back in late June?
Yeah. So that's, for myself and for our group, like everyone got super bearish on the market. And we were
Yeah.
seeing through our analysis, every week I'm looking at positioning data in the market. That's another key component of
Through
my
what?
process as well.
COT?
Yep. Yeah.
Commitment
The
of
COT
traders?
data is great. I love that. And then there's also the Naeem exposure index, which I love looking at.
What's that exposure index again?
It's the Naeem exposure index.
Okay.
And yeah, it's basically like an index of equity fund managers, and they just say how exposed they are to the market.
Okay. I
And
know there's
yes,
a
I love
hedge
that one.
fund index like that that shows like hedge funds were underinvested all the way up.
Yeah, and we just saw over the last couple of days, there's been a lot of hedge fund short covering.
Okay.
So yeah, those guys are getting blown out of their shorts now at this point. But yeah, back in May, I just saw like everyone was talking about how overvalued all these companies were after they had gotten hit by like 50 to 80% off their highs. And it just seemed like a really good contrarian time to make some additions to the portfolio. So that's really where we were getting very aggressive. And
Were there
now,
market profile signals around that 36.5 level? Because it hadn't been there for a long time. So I'm wondering, what may have tipped you off for a turn with what you use.
yeah, so honestly, in terms of the turn, so I incorporate so many different disciplines into what I'm doing. Honestly, what I was looking at was the positioning data was super, super light. I saw
Yeah.
some survey data that showed these hedge funds, they're at record net short levels. And then we also started to see on the technical front, we started to see energy stocks breaking down. And that was like a big tell. We started to see those guys break down, the fertilizer stocks breaking down. A lot of those inflation beneficiaries were really just coming off their highs. And the growth stocks, like the high risk stuff,
Yeah.
that started
Russell.
bottoming out in May.
Russell.
Also the ARK Innovation ETF. Can you see my
yes,
screen
sir.
at the moment?
Yeah.
Are you seeing my chart up here?
Yeah, I see the ES.
Yeah, so look at this. Let me show you something. So this is the ARK Innovation ETF. Let me just pull this over here. So I use this as a gauge for like growth stocks, high risk stuff, lower quality stuff.
Yeah.
And look at what happened here, Dale. So we made a lower low in June.
Right.
But then later, we ended up making a higher low, higher low, higher low. And what's interesting is like, look at the shape of this chart, how it's kind of just like drifting higher.
Yeah.
The ARK Innovation ETF, look, the low was made in May. This was the low. In June, we made that first higher low. Look at the S&P 500. Look at May. So if you look at, this is back in May, right? The S&P 500 made a lower low in June, whereas the ARK Innovation ETF made a higher low. So that was a huge tell.
Yeah, that is. I didn't notice that when that was happening down there. Very nice correlation seeing that, because that was the one that led the way down. Why can't it lead a recovery?
Exactly.
Okay. So what are you thinking here, Andrew? I mean, we're approaching this 200-day. Everyone's eyeballing the 200-day. We get some type of resting action here before it attacks the 200-day?
Yeah, so Dale, I'm going to be perfectly honest with you, man. I'm pretty much out of the market. I have a couple positions left. But honestly, this rally off the lows, like you're an experienced guy, like you know how this stuff works. Like on average, the S&P 500, an investor can expect about a 7% return per year. And the S&P 500 just advanced like, 10 to 15% pretty much in a straight line.
In 2 months. Yeah.
Yeah, the NASDAQ's up like 20. It's crazy stuff.
Yeah. So flat. So that means no opinion, but lots of firepower. Should you get that pullback, you're a buyer.
Yeah, so I do have an opinion. So right now, like this is actually how I'm exposed. So right now, I keep track of everything here on this spreadsheet. This thing really helps me. But right now, the only position that I have on, it's actually a merger arbitrage trade. And it's a Twitter long. And then right now on Friday, I picked up these exposures. I got long some VIX by November 16th, 25 strike calls. And I'm also long some IWM put options as well for expiration in September. So those are the only things I have on, but I got 70% cash. And I'll show you the model that's really informing that if you'd like to see it.
Sure. Appreciate you sharing it.
Yeah. So this is something, and again, like I've had so many successes and failures in trading. And it's always just, how can I get better and how can I improve? So this is a model that we created. And this is our VVIX risk model. And I'm not sure if you follow the VVIX, but it tends to be a leading indicator of the VIX. And it's basically like, what do the prices look right now in terms of VIX options? And as you're aware, the volatility of the market, the VIX and the S&P 500, they tend to be inversely correlated, right? Or when the market advances, volatility is coming down. So this model, all it does, it takes a look at the 5-day correlation of the VVIX with the S&P 500. And when those correlations start to increase, so when the market's going up, but the VVIX stops going down or even goes sideways or starts to move up with the market, it'll flag that as a white candle. And historically, when you get 4 white candles in a row, when this correlation picks up, there tends to be like a little bit of volatility. And you'll notice that here, gave a signal back here as well in August of 2021. This thing has given so many signals. Again, no model's perfect. Every once in a while, there's a false signal as well. But like, look at this, man. So this is before the COVID crash. Look up here. Look at all these white candles.
Yeah.
So for this, I incorporated this into my process. And I said, you know what? If I ever get the signal, I'm going to make sure that I close out of some positions. I de-risk myself. And the worst thing that can happen is the market continues to advance. And that's perfectly fine with me. So yeah, I exited most of my positions.
And we got 3 of them here.
Yeah, so I exited most of my stuff. And again, worst case scenario, the market advances, but so far in the pre-market, we're seeing some weakness here.
That's a proprietary indicator. That's something you came up with yourself, Andrew?
It's actually something I borrowed from a friend. I kind of like repurposed it and recreated it. But yeah, this is a tool that I use. We call it, so this is our VVIX Risk Model. And in terms of setups, I call this setup.
V like victory, VIX model.
Yep,
VVIX.
exactly.
Okay, interesting.
And this setup that we're seeing in the market, like I have a trading journal and I keep track of all my setups. I'm calling this one an overheat setup in the market. So like right now, when the overheat setup occurs, I tend to get more flat, reduce my exposure to the market, and I have the option of adding some hedges, which is what I did. So we'll see if it works or not. But regardless, like this has just been such a good couple-month run. I'm like, if it keeps going up a little bit, I'm perfectly fine with that.
Yeah. Have you made the transition? I know earlier in my career when I have a good run, I would psychologically say to myself, well, it's only the house's money. And then, you're sloppy because you feel like it's not yours. But, over the years, I learned to say, well, it's mine now and I'm going to protect it. So I think that after you have a good run, sometimes you get a little hubris and get sloppy. Did you experience that at all in your journey?
I experienced that. And that's actually the genesis of that VVIX risk model, because I find what most traders do is they tend to, as the market advances, they're making more money, like you just mentioned. And so they start getting more bold and adding more risk and layering leverage and options. And what ends up happening is they're the most exposed to the market at the top. And then when the market starts rolling a little bit, like I see this right here. This is the 20-day simple moving average, right? Like I see it as we've got immediate term risk to the 20-day, because the market, always tends to mean revert to the 20-day. But yeah, so you end up being the most exposed to the market at the highs. And then as the market pulls back, you end up stopping out of positions and you have the least exposure on the lows. And so for me, it's like, I don't want to be like that. I've been that trader before, that you get excited and you just go too crazy. So for me, it's like, again, the worst thing that happens is the market rips up to the 200-day simple moving average. If that happens, I'll just be like, you know what? That's great.
One of our attendees says, is it similar to VIX in TradingView?
Yeah, so you can find it on TradingView. It's just the VVIX. So like the VIX measures the price of options on the S&P 500.
Yeah.
And the VVIX measures the price of options on the VIX itself.
Okay. All right.
So it tends to be a nice leading indicator.
Okay. Any other instruments that you're focused on, or is it mainly stock indexes?
So the stock indexes I do trade, but primarily I trade mostly growth stocks. So I'll show you a few that are on my radar if that's cool.
Sure.
Yeah. So every single week, I do my homework every single weekend, and I prepare a bunch of, pretty detailed trading setups.
Yeah.
So because I have this view that, hey, the market's overheating a little bit, again, like I never turn into like, super perma bear or anything like that, or I try not to be like too biased in the market. But this stock Enphase, the whole year, the major theme has been energy, whether it's, clean energy, solar stocks, or I refer to it as dirty energy, crude oil, that sort of stuff.
Right.
Enphase, this is a stock that we traded this one, and we took the stock from about 180 bucks, like down here, all the way up to about 280. And I closed out the position because I was like, you know what, like enough is enough. Like sometimes you just hit your target and you want to just piece out of it. But I'm continuing to watch the stock. And for this setup, I'm actually looking for a pullback to the 20-day simple moving average. And if that happens, I would love to take this thing back on the long side.
Okay.
So yeah, Enphase, and I'll just show you this as well, Dale. So I use
nice breakaway gap it had coming out of it. Really classic Edwards and McGee technical analysis of stock trends stuff.
Yeah.
Yeah.
Yeah. And this company, it has the sales growth and it also has the earnings growth.
Okay.
Like I'll show you this as well.
So you look at the fundamentals are important.
Yeah, they are important. I like the technicals for assessing the trend, and the fundamentals kind of inform me on like how big could the move be. And yeah, it's definitely an art, but I try to focus on stocks that have really good technicals and really good fundamentals as well.
Yeah.
So look at this stock. Look at the sales growth that we've seen over the past couple of years, pretty phenomenal.
Yes.
And the earnings growth as well is really good. So this stock put in a beat and raise quarter, while a lot of other companies, they're getting crushed.
Yeah.
But it does trade at a high PE ratio. Look, it's at a 91. And I don't trade off of PE ratios or anything like that. But I just try to be cognizant, like, if I hit a really nice winner in something, like I just want to control my risk as much as possible.
Okay. All right. Well, it was a great presentation. Really enjoyed, hearing your story and learned a few things from you, Andrew. Best way for people to get in touch with you, follow you. I know your Twitter handle is at Real Pristine Cap. Is that the best place for people to reach you, or you want to show your website on the way out here today?
Yeah, that would be fantastic. So yeah, definitely follow me on Twitter at Real Pristine Cap. But if you really want, market analysis, everything I'm trading in real time, visit pristinecapital.net. And this is really where you can find us and you can find our group. And really, like, the main focus of our group is just to trade, make progress, and really everyone's just focused on improving. It's not really about like, let's double our accounts overnight or anything like that. It's, let's just try to get better and let's really tackle this.
Okay. Well, I tell you what, your love of the business shines through in what you say. I could feel it, and really, I'm glad that we met. Like it or not, you're now my trading warrior brother.
Oh my gosh.
You survived an interview with me. I was pretty easy on you though.
Oh my gosh. Thank you so much, Dale. This has been so much fun for me, man. I really appreciate it so much.
Well, we'll do it again. How
Awesome.
about
I would
that?
love
Down the
to.
road in the fall, I'll get a hold of you on Twitter, and rooting for you and all your people now, Andrew, and good luck the rest of the summer trading season and into the fall. And thank you for sharing your wisdom with us. That wisdom is something that isn't just given to you; it's earned through sometimes taking a kick in the teeth. So appreciate you doing that. Thanks very much, and I'll catch you next time. And everyone seems to enjoyed it. Bhavana, thanks. Laura. So thank you for sharing your
Yeah,
work
thank you
and what
so
you're
much.
looking for. What you're looking for.
Thank you so much. And thank you to everyone listening. I really appreciate you all.
Yeah, and don't just count your indicators, count your blessings. And I'll be back tomorrow for Turnaround Tuesday. And you could join our team, the Dream Team, in about 18 minutes on the Morning Edge. Everyone have a great day trading. Adios, and thanks one more time, Andrew.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.